in the last 18 months, there hasn't been much happening on the investment cycle. So, there haven't been many opportunities for corporate lending. And in addition, of course, we were expanding our product portfolio to retail customers, which saw us doing above normal rates of growth on retail credit. We still don't have a fully penetrated offering to retail customers. So, I think retail lending will continue for us to grow faster than what we would expect in a more normalized scenario. But if the investment cycle comes back, I think it's fair to expect that there will be more opportunities for lending on the corporate front, and we will have to play that as it comes.
But what kind of numbers are you looking at in terms of credit growth per se and for FY15?
So, as far as credit growth is concerned, our credit growth will get constrained by what happens on the funding side. Axis has had one of the strongest CASA franchises in the banking space amongst the 10 large banks. I think we have one of the strongest franchises, and we would like to make sure that we keep investing in that franchise and growing in that franchise. But how well we do on CASA is what will determine how much we can do on the lending side. So, we are not saying that we are targeting a hard ratio of 40% or something like that, but I think it's just the relative outperformance of the sector on CASA what will determine our relative outperformance on the credit side. So, if CASA for the system grows at let's say 12% and we grow at 15-16%, so we grow 3-4% ahead of the system on CASA, then we think that will earn us the right to grow 3-4% higher on the credit side as well. So, if credit for the system grows at 14-15%, then we could grow 3-4% higher than that, provided we are growing higher on the CASA side as well.
Right, and asset quality, of course, has been something that we've been talking about for quite some time now. Do you think that it's going to slightly get better from FY15 onwards, and is that something that will probably become less of a concern for banks like you?
So, I think there are 2-3 things which impacted asset quality. One was the logjam on projects that we talked about. 2 was the logjam on the payment cycle, resulting in higher working capital requirements, and 3 was the deadly combination of low growth and high inflation, high interest cost. All of those 3 factors adversely impact asset quality for banks, and the hope is that all of those are going to start moving in the right direction. So, clearly I think that should help asset quality for banks, and we are very much part of the system, so it should help asset quality for Axis Bank as well.
And the other issue, of course, was restructuring. So,
Yeah.
is that something that we might see a lot more of in this year, or do you think that that also will start kind of petering down?
I think as projects come, some of the projects come in for implementation, some of those may need reschedulements or even restructuring. So, I would guess that for FY15, we are still going to see some more slippage and some more restructuring, and we would expect that to start to come off FY16 onwards. But we do think that from a credit cost perspective, credit costs have kind of peaked, and it shouldn't be worse than FY14 this year.
Given the fact that there is still a lot of capital available overseas, is that something that you'd be willing to tap?
So, we raised capital in the last year, in February 13 as far as I remember, and when we raised that capital, we raised enough capital to make sure that we didn't need capital for at least 3 years. Last year there hasn't been much growth on the credit side, so in fact our tier 1 ratio has improved since when we last raised capital. So, currently Aniruddha, we don't have any need to raise capital, and we wouldn't want to unnecessarily go and raise capital if we don't see visibility on using that capital. We think we're one of the best positioned banks right now from a capital perspective. We are, even under Basel III, we have enough capital for the next 3 to 4 years. So, no, we are not intending to go to the markets for capital.
Right. So, a lot of your peer banks are listed overseas at the NYSE, and they have their ADRs going. Is that something that you would be open to the idea of? Are you looking at any kind of a overseas listing or an ADR?
We are always open to whatever makes sense for investors, so we will evaluate that as we go along.
All right. So, another question which I want to ask you is in terms of organic expansion plans. There are a lot of small-sized banks available, a lot of other financial ancillaries available at this point of time. May not be something that you're looking for, but Is organic expansion is that something that's back on track for you?
So we think we've had a very good model of organic expansion as far as our core business is concerned, and that's worked well for us. It's kept us focused. It's kept us very productive. So we would be open to look at inorganic expansion, but the acquisition target needs to make sense. So if it's a small bank which is going to add what we end up adding in the normal course in a year, then it may just end up being too much of a distraction. And unless it's bringing some core strategic capability that we do not have, I'm not sure whether inorganic acquisition would make a lot of sense for Axis Bank at this point.
So we saw somewhat of a dovish tone coming from the RBI in the recent policy statement. But despite that, do you think that he'll probably be forced to keep interest rates at these levels for quite some time, at least the better part of this year, to ensure that inflation doesn't go out of hand from here on?
I think RBI will look at a lot of parameters when they think about what to do on interest rates. I'm sure they're going to look at what's happening on the domestic policy front, what is happening in terms of the initiatives that the government takes on the supply side. They will have to be conscious of what's happening in the global markets as well, because today we are in a very connected world, and flows impact us in many different ways. So action in Iraq changes a lot of things, and without that, one might have felt that the chances of a rate reduction were better. With what's going on in Iraq, maybe chances are going to be a little tougher. So you'll have to look at global indicators, you'll have to look at what's happening on domestic policy, and then I guess RBI will have to take a balanced view on where to go in terms of the growth versus inflation versus financial stability situation.
So are you worried about the goings on in Iraq and in the Middle East, given the kind of effect that it could have on the Indian economy?
I think it's definitely a problem, and hopefully it gets resolved and contained sooner. But otherwise, given our dependence on oil right now, it has a direct impact on oil prices and knock-on impact on other commodity prices as well. So definitely it's a problem from an inflation perspective and from a CAT perspective.
So the markets, for one, are clearly zooming up to new highs almost every day. So I just want to understand from you, do you believe that things are going to get better in terms of the market sentiment, or do you think that this is an initial euphoric kind of reaction which may just die down going forward?
So as I said, according to me, I think sentiment means a lot, because if you have belief, then you can make a lot of things happen. And markets will always be ahead of the reality, right? The markets will discount the reality by 12 to 18 months depending upon general risk appetite across the world. So I don't think the markets are going to say that your GDP is going to become 7% tomorrow. The markets are saying that we now see a growth path going forwards, and we expect that the situation is going to look very different 12 to 18 months from now. And I think we have reason to believe that that will be the case.